Hey guys, let's talk about long versus short. These are trading terminologies to describe a position the trader is executing. So the definition of a long trade is when the trader has purchased an asset and are waiting to sell when the price goes up. This is also known as a buy or a long. To see this on the chart, basically you can see here the trader purchased the stock or the shares at a lower price to sell it at a higher price, making a profit of the difference in between. So that's going long. The reason why a bull is used for this is when a bull strikes, it tends to lift. So that's why they're using the bull as a symbol for a bullish movement. Short trade is the exact opposite. A lot of people tend to get confused with this. Um, so basically, it's you start with a sell and close a transaction with a buy, and just like the long, the difference in between is what the trader makes. To see this on the chart, the trader here would enter a short position um, that's offered by the exchange, and you know sell at a lower price for the profit. The bear is used for this particular action because when the bear strikes, it tends to strike downward. That is why it's known as a bearish movement. You want to be careful with short trades, though. Some exchanges don't offer shorting, so it's kind of exchange dependent whether the exchange can borrow it or not. Because as you can see here, the share has to be available for short. The exchange will tell you if it is available for that particular stock. Not all stocks are shortable, as this slide indicates, especially ones that are new, like in an IPO or in a SPAC. And the other things you want to take a look at is when you go short, there you can have the ability to lose unlimited amounts of money. Um, so, like in this example, if the trade here decides to go against the trader, going up instead of going down, a stock can go up as high as it wants to, depending upon the momentum and rally behind it. And that would be a loss. Let's take, for instance, GameStop. And lately in the news, there was a short seller who indicated that the stock was going to plummet. A lot of people were unhappy with that, and several people banded together, or a bunch of people banded together, known as the Wall Street Bets Group, and started to purchase the stock in more of a revenge towards the report. And as you can see here, like yesterday, it was like around the 90 range, and it continued to spike. It started days ago, where here it actually doubled. But if you took a short position here, or even here, this thing went all the way up from $90 to 366 overnight. So that is quite the loss of your position. So I know some places I've heard as rumor, like Melvin brokerage, or what kind of some kind of funds they do shorting. I think they probably are going to end up going bankrupt. So we'll have to see how that plays out, because this is quite the run. All right, so back to the slides here. This is so you just be careful with doing a short. So when you do sell the short, or not sell, I'm sorry, buy the stock when you're doing a short. That's called covering a short. That is the other lingo for exiting a short position by doing the purchase. Okay, and yeah, actually that's the other item I want to point out. When you do a when you cover a short because you're losing or you exit the position, you actually perform a buy. So when this is occurring and there's a bunch of covering that's occurring all the time, that is what they call a short squeeze. When a bunch of shorts are being forced to close their positions, causing the price to just even go higher because a buy was put in place to exit the position. So be careful of that, but that's what a short squeeze is. Okay. All right. So to wrap it up, long versus short describes the direction of the trade. Scalp, swing, and day basically describes the type of trade in relation to time. And then bearish and bullish describes the direction with time, also known as a trend. Alright guys, hopefully that helped describe what long and short is and how it relates to time and how, a short squeeze can happen and causing the price to rise dramatically very quickly in a very short amount of time. Alright guys, take care. Bye.